Folks, have you ever heard of Ivy Zelman? If you haven't, somebody you should really go check out. She has been talking about a building crisis coming up, meaning there's too much supply, too concentrated, really is her point. And we are starting to see that right into a banking crisis, right into regional banks slowing down lending. And we have a lot of stuff coming. Jonathan Twomley is in the multifamily space, and he's like, Michael, we got a problem and we need to talk about it. Jonathan, what is going on? Because we have some pain coming, I think.
Yeah, so we have a supply overhang in the multifamily
You
market,
say
right?
that like, oh, we have a supply overhang.
Well, so what this means is that there has been just a massive amount of construction in the multifamily business. And um, we basically, right now, there's more multifamily being constructed in terms of unit count than at any time in history. The last big boom we had of building was in the 1970s, kind of in response to the baby boomers, sort of reaching household formation age. And then after that, multifamily construction really slowed down. A lot of the energy went into single family home construction, right, as the suburbanization trend continued, and people, especially through the housing bubble, sort of the long housing bubble through the 90s into the early 2000s. But what's happened, since is this, multifamily became the flavor of the month after
The
the great
flavor of the
financial,
decade. Yeah.
yeah, the flavor of the decade after the last financial crisis. And, there's a herd mentality to all markets, but real estate is one where that certainly is the case. Because these assets are so, let's say, it's just so capital intensive, right? I mean, building homes, building multifamily, it's so capital intensive that people tend to all run to what they think is the safest, right? And so for a long time, multifamily was seen as the safest, and in particular, certain cities were seen as the safest because of the demographic changes that were going on. And what happens is what always happens is that during a boom, a lot of people, everybody having the same idea, which individually makes sense, but collectively doesn't make sense, all built in the same place, built too much. And now we're in a situation where supply is going to outstrip demand for multifamily in a lot of places. Now, this is not necessarily nationally, but even on an aggregate level, they're saying that how the amount of new multifamily coming onto the market is going to outstrip demand, even nationally. But what that really means is that's on average, right? It's going to be extremely painful in certain cities.
Location. Yeah.
Yeah.
Yeah. When you look at the total picture of the U.S., it's a problem, but that's not how multifamily works. It was so many concentrated bets in a few locations. It's going to affect rents. And
Well, and yeah, it already is.
Go ahead.
Yeah, I'm sorry to interrupt you, but I mean, it
No.
already is affecting rents, because we had this essentially, there's a lot of different things that have happened all at the same time, right? This run up in multifamily has taken a decade to really gain momentum, right? Because for 5, 6, 7 years, through the end of the last decade, even the constant talk was there's not enough multifamily, more needs to be built. We have a supply and demand imbalance. They're not building enough, right? We see a shortage coming for years outwards. And it's just taken a long time for the amount of new projects to kind of just continue to ratchet up to where we got to this point where now we're building 1 million units this year, and on top of what's been built, recently. But you also had this phenomenon of where COVID sort of pulled a lot of demand forward, right? So a lot of
Exactly.
people who were, say, thinking of moving south or thinking of moving, out of the downtown areas, or just moving in general, because of COVID, they say, 3 years of that got compressed into 1 year, drove rents up like crazy. And then that made people think like, oh my God, we got to build more multifamily because look at these rents. And the banks all went, look at these rents, we're happy to lend. And so that just accelerated it even further. And then whammo, you've got,
I'm so glad we got out early.
yeah, I mean, whammo, you've got this, confluence of factors now, including rising interest rates, the constant drumbeat of we're going to be in a recession, we're going to be in a recession, whether it's true or not. That's what people are thinking. They become scared. They're not, household formation is slowing down, right? And we don't even get into the demographic stuff that Ivy ZELMAN talks about, which is a little bit more of a long-term phenomenon. But even just in the short run, we're now in a situation where a lot of cities are oversupplied with multifamily and rents are falling. And they were probably bound to fall anyway because they had gone up so much. It wasn't sustainable. How fast they went up the last couple of years. I mean, 20% increases in some markets year over year. Like that's just not sustainable, right? And so you knew that some of that was going to be given back, but at the same time, because you just can't extract that much rent from people, right? They push back. But now they've got options, right? Because there's all this supply coming on. They're like, hey, I'm going next door to that brand new building across the street, and where they're giving 3 months of free rent away. So
let's kind of play this. Let's play out the dominoes for folks, right? So let's assume there's a city out there that a lot of units come online. It's Class A, obviously, because that's the only thing that quote unquote pencils. So if you kind of play the dominoes out, the existing Class A loses some tenants, right? There are just some people that like to be in the newest and greatest stuff, especially if they're trying to fill it up with a 3-month rent special or something like that, which is very common. That will cause that operator to probably lower rents and compete, maybe offer a month or two. They will pull from Class B or B plus or whatever it is. This will have a big trickle down effect. And it could be felt relatively quickly. Probably over a couple of quarters, you could see that cascade of just this new stuff coming online. It won't be a weekend or a month, but it could be over a 6-month period. You'll see it ripple through the entire apartment sector in that city.
Yeah, and what you see then is you then have a phenomenon where owners start playing defense, right? Because they know that on a turn, they're very likely to get less rent the next time around. Correct. So the strategy stops becoming like, hey, let's keep pushing rents, let's renovate, push rents. They're like, oh, let's stop and just focus on renewals and keep the people, in the apartments who are there, because what you don't want in a situation like this is to have someone move out and now you have to fix the apartment, right?
Correct. Because the turn is what kills landlords. Yes.
Yeah. Not only do you have vacancy, but you have actually, people think, oh, it's vacant, it just means money's not coming in. No, it's actually negative because you now got to go and fix that apartment, right? And that costs money. So landlords now were just in this like, hey, we just want to stop the bleeding, right? And so that basically means that rent hikes kind of grind to a halt, and you start having, a lot of concessions, or you start having, just you can't underwrite rent growth anymore. And I mean, eventually this will play through the system where you'll wind up where banks will stop lending on new projects, and then the new cycle starts, right? Because then you have basically, there's no new supply after everything that's in the pipeline gets built. And then you've got your natural population growth, which will absorb it. And then eventually the numbers will look good for banks again and they'll start lending. But banks are sort of always behind. This is the problem with development. Like they're always behind, right? Because they're looking at whatever the data is right today when they make a decision. But the problem is the project comes online in 2 years, right? So everything may look really good right now, but in 2 years, when they are trying to lease those apartments, you don't know what the situation is going to be like. On the other, conversely, what'll happen too is that, the numbers look bad, but that in 2 years there's going to be a shortage, but banks won't lend then, right? Because they're looking at what's happening right now. Exactly. So if you could get your hands on money to build, like at the worst, that's probably the best time to be building is like when everybody's saying the news is bad, but you can't get the money because the banks are just saying, oh no, there's too much supply and we're not going to lend, right? So, but you've always got that problem of there being this like lag between the pipeline and the reality on the ground.
Yeah. So let's kind of play this out and tie our two audiences together. So again, the series of dominoes, it'll ripple through that city in multifamily over the course of 2 or 3 quarters. But how do you see that playing, single family homes, right? So if we kind of play this out logically, rents will be falling in the apartment building. So maybe it's cheaper to rent than own. but we also know the residential market is, there's just no supply. So, how do you generally, or how does it usually affect single family homes in your experience? And if you don't know,
Well,
yes.
I'll just say what Jay Parsons says about
Okay.
this, right? Because he's real, so Jay Parsons, in case you don't know, is the chief economist at RealPage, and
There
he
you go.
posts a lot on LinkedIn. It's a really smart guy, and I really recommend that you follow him on LinkedIn. What Jay
I can do that.
Parsons says essentially is all housing is related, and it basically, what's good for housing is good for housing, what's bad for housing is bad for housing, and it really doesn't matter if it's single family, if it's multifamily, because
Okay.
it's the same forces driving performance in both, right? So you've got, when the economy is good and rents are going up, that also is going to have an impact on single family homes. When the economy is bad and rents are going down, it has a negative effect on single family homes, right? And there may be some lag time differences between the two markets, but basically they're traveling more or less. There's a correlation between them, right?
Okay.
So
I like it.
so that's what I would say. I would say if you've got rents declining in multifamily, I mean, clearly it's going to have an effect on the single family rental market, right?
Right.
And then when there are less investors trying to buy single family homes to rent, that obviously drives, it's going to have an
Okay.
impact on pricing. So
Very, very cool.
yeah.
Well, folks, stay tuned for episode number 3, where we talk about mistakes from the past being done again, because people are always fighting the last war. But before we do that, Jonathan, you have an amazing event coming up, which I will be at later, actually in April, right
Yes,
around the corner.
right around the corner, less than a month away, April 26th to 28th in Las Vegas at the Link Hotel. It is the Multifamily Wealth Project Conference that I'm putting on with my good friend Omar Khan, who's another great multifamily real estate investor. And we have a special discount for ORAT members. If you go to the multifamilywealthproject.com and you use the discount code ORAT with 2 A's 35, you can get 35% off your ticket and a VIP upgrade if you also want to get the VIP upgrade. It's going to be a great conference. However, the VIP upgrade, because we have to tell the hotel how many VIP dinners we need to serve, we need to tell them that on April 6th. So you cannot buy a VIP upgrade and hang out with me and Michael in the VIP dinner unless you act before April 6th. So go buy your ticket between now and then. ORAT 35 is the discount code, and it's going to be a great event.
Awesome. I see y'all there. Thanks, Jonathan.
Mm-hmm.